Hey Harvesters, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be going over the trades I executed for May 1st, 2025. I'm going to be talking about my covered calls, cash secured puts, and then I'm going to discuss a weird phenomenon that happened in Robinhood last night. And I'm going to point it out, and then we're going to talk about it once I get to my spreadsheets. But you guys know me. The first thing I like to talk about for my channel is my account value. Currently, it's at $90,609.01. For anyone that is a new viewer to my channel, the whole point of this Robinhood account and this channel is premium generation. So that's generating premium either daily, weekly, monthly, or yearly. And I'm also trying to capture some bit of upside, but ideally the goal is to find a way that I can produce a income so that I can get to financial freedom a little bit faster. So if you're interested in that, don't hesitate to subscribe, hit that like button, leave some comments, and let's get this ball rolling. Quick call out before I go to the spreadsheets. As you guys can see for my SPY shares, I have 108.23 shares. So every time I generate a premium daily, or weekly, or monthly, I am continuing to buy SPY every single day, or every time I get premium, I'm buying SPY with it so that I can compile another 100 shares of SPY, run covers calls against it, and then I have the 100 shares, then also borrow against it and run some cash secured puts so that I can produce more and more income as I continue to grow my account and then buy more shares of SPY to run more covered calls. You guys get the point. Okay, guys, we are at spreadsheet time. So for May 1st, let's start diving into the numbers. For SPY, this is what the weird occurrence happened last night. Robinhood told me that at close of trading hours yesterday that my SPY shares were below the cost basis. I had a 555 strike price, as annotated in the log above here. I had that 555 strike price, but then at the close, Robinhood was saying that SPY was at 554.54. So I thought, okay, my shares were not assigned. I'm going to rinse and repeat. But then later on that night, SPY says they voided that expiration and then assigned my shares. So I was quite frustrated when I saw that. Let me show you guys the Robinhood message. So here's what happened, guys. For my SPY 555 call expiration, it was voided, basically saying that your expiration was voided because this option was exercised, even though the underlying equity expired out of the money. Basically, what this means is an investor hit the exercise button and then took those shares away from me when it was in the money. So it is what it is. I would have liked to have continued to have my lower cost basis for my SPY shares, but then today, instead of not having 100 shares, I just bought back in. And then I was quite aggressive because I didn't like the price I bought my SPY shares. And then I chose strike prices that were like about $3 or $4 away from the at the money. And I racked in a decent amount of premium. The market didn't move up or down. It just stayed relatively stagnant. So I cashed in quite a bit of premium today as compared to my other days. So let's go back to the spreadsheet and then dive into those numbers. So with those shares being assigned, I made about $342 off of that assignment because I bought the shares at this 551.58 and then sold at the 55,500 for a $342 gain. So that was quite good. And then this morning I bought another 100 shares of SPY because I wanted to run covered calls against it. So I bought them at the 59.62. I didn't really like that price, but end of the day, I still think that buying the SPY at this number is at discount. So therefore, I didn't really hesitate to buy this morning. I'm like, I got to get back in the market and then make some more money. That's what I did. Then with those 100 shares of SPY, I ran a covered call. So the sold price for the covered call was $157. So basically, investor paid me $157 to lock in selling my shares at the 562 strike price. The market opened at that 560.42, bought the shares at the 559.62. So I choose a strike price that was like $2 away from the money. I was like, man, I don't really want to be stuck with these shares at this high price. So I wanted to be relatively aggressive when it comes to my premium today. And I chose something $2 away from the money, or like $1.58. And then I cashed in a nice $157 premium. By the end of the trading day, the SPY was trading at 558.48 at the close. The shares were not assigned, and they were nowhere near getting assigned this time. And then the second leg of my strategy today is I ran a cash secured put. And what I did is I made $92 off of that cash secured put, and I chose a strike price of the 554. When the SPY opened at 560, I wanted to choose a strike price that was $5 or $6 away from the money. So I chose the 554 and it netted me about $92. I thought that was a pretty good move. And if I happen to get these shares assigned, I would have no problem turning around doing covered calls against them until I either sold out or just continue to generate premium off of those second set of 100 shares. I would theoretically have to use a little bit of margin. I think I would use only about 30K of margin, but then 30K of margin over, a 12-month period is not that much money. I think it's like $50 or $100 a month. And I'm generating way more premium per week, per day than that. But in total, guys, between the appreciation of getting my shares assigned yesterday, the covered call, and the cash secured put, I netted $591 today, which was quite a great haul if you were to ask me. Now that we wrapped up talking about May 1st progress, let's go take a look at the holistic overview of the last, I think, 14 trading days. These are 13 or 14 trading days that I've been running these options. Let's take a look at holistically how it's performing on a day-to-day basis, week basis, month basis, and then year. It hasn't been a year, but let's just talk about those things. So let's go over there. So kicking it off with the May 1st numbers, at the end of the trading day, my account value is at $90,600.35. The total premium I have generated after 14 trading days is about $2,880.53. And if we look at that as a percentage rate, comparing this current value to the value that the account was on April 11th when I started this, we're up 4.97%. And if we compare that to the SPY is actually over the last month period only up 0.71%. So I'm outperforming the market by 5 to 9x. And especially in this market when it's kind of very choppy, nobody knows what it's going to look like, to make almost 5% is quite impressive. Let's take a look at the trade win percentage. I have won 92.86% of my trades. I had 13 winning days, 1 losing day, and then we traded 14 days. The average premium that I make on a day-to-day basis is $205.75. And if you look at that at a weekly rate, that's about $960.18. And the monthly premium is going to be exactly what we are seeing here. It's $2,880.53 because I haven't been doing this for a full month yet. But let's dream a little bit and let's take a look at what this earnings are going to look like if everything stays status quo. I know the market conditions can change, but let's dream a little bit. So if you look at an estimated average yearly premium, just taking this $2,880.53 and multiplying by 12, 12 months in a year. So easy number. I'm going to make about $34,566.36 of premium, or like trading appreciation. If you look at that as an average yearly percentage, that's 40%. Most years, the SPY is nowhere near 40%. It's usually between bear markets and bull markets, hover somewhere between 8 and 12%. So the fact you can pull out 40% year over year is actually a really good number, and it's definitely something I'm looking forward to as time progresses and to grow my account. Let's take a look at the week over week values. The first week that I was trading was only like a couple of days, and I made $1,688. I had a lot of appreciation wins there and then premium gains. Week 2, I was a little more conservative with choosing a strike price, and with that, there was a lot less in premium. And then for the April 21st week, I lost $740. Most of that loss was from one trade. One trade, I lost about $1,699. That was being a little too greedy. I was choosing a strike price that was far below my dollar cost average. I butchered rolling the options. I should have just rolled to another day, but then I wanted to be greedy and then just kind of push it out so I can make the money back. And then turns out I lost, $1,699 because I sold at a loss, or my shares were assigned at a loss. But kind of what I've been saying in my last few videos, after this loss, I won 3 trades in a row. And then the loss wasn't $1,699. At the end of the week, it was only $740. So I consider that a win in itself. Still learning point. Don't do whatever I did on April 22nd to prevent that. And then for this last trading week, starting from April 28th until May 2nd, we are currently at $1,083.50. That is a good chunk of change. And I still have one more trading day to go. So let's try to rack in a few more dollars and then wrap up that week. For the month of April, we're at $2,880.53. I probably can start putting the May numbers in this monthly tracker, and the yearly is not going to change. It's just going to be this total value that we've already been looking at. Now let's go over to Robinhood and discuss what the plan is for tomorrow. Okay, guys, I navigated to SPY, and then let's go over to the trade SPY options. This is my favorite button of all time, the money printer. Let's click on that bad boy. Okay, guys, if you guys can see my screen here, the buy option, don't ever press this button. You're going to lose money. That being said, first thing we're going to look at is sell call. To run a sell call, you have to own 100 shares of an underlying. 100 shares is one options contract. Now let's take a look at the numbers. Currently, SPY is trading at this 562.76. And usually my thesis is I choose something like $5 or $6 away from the money. I looked at the earnings for tomorrow, and it looks like it's going to be some of the energy sector companies like ExxonMobil, Shell, and then there's some chemical companies and T. Rowe Price. I don't necessarily know if that's enough, if those companies have enough sway in the market to move the market up or down. They may or may not. But let's choose something let's take a look at this $5 away from the money. It's about $38. Maybe we can shoot for something like this 564 and make that $87 a premium, but that's about $2 away. Let's be safe at this 567. Let's choose this 567 strike price and then go with that. So we'll make about $38 for its covered call. Not that much money, but I'm trying to capture some of this upside. And depending on what happens tomorrow, it's going to dictate how I trade on Monday. If the market is relatively stagnant to going down, I'm probably going to choose a more aggressive strike price that's closer to at the money. That's what I'm going to do with the covered call side of the house. And then let's go over to the cash secured put. To run a cash secured put, you have to do sell call. And the way it works is an investor is going to pay you upfront premium to lock in, or basically to offload their shares at a specific price when the market's going down. But the only thing that you have to dish out is collateral that could either be margin or cash, so that you can, in the case that this option is assigned and the market does go down, you're going to get assigned those shares and you're going to use that collateral to buy those shares. Okay. So same story. SPY is still trading at this 562.60. Let's take a look at some of these numbers. Let's see. These seem relatively high for what this is really high for what the market usually shows. In the morning, it's gonna change each, and they're gonna be a little bit lower. But from what we are seeing, we still have to make a strategy. I'd probably choose something at this 550 mark or this 549. This would be a great price to lock in SPY at, the 549. Also, getting $127 a premium would be quite nice as well. That's kind of what the plan is tomorrow. It always depends on what the market is showing in the pre-market. And then when it opens, I usually wait like, 15 minutes after the bell rings so that I can kind of see how the market's flowing. And then if is a market biased towards bullish or is it biased towards bearish? So that's kind of what the calculation I make in the morning. We'll probably choose something, $5 or $10 away, just kind of keeping true to the my thesis going on here. But yeah, guys, that wraps up the video. If you have any questions or comments, let me know in the comment section. I read every single one, and I also love hearing your guys' wins about how much options premium you're making on a day-to-day basis. Love hearing that stuff. Throw in the comment section. But yeah, guys, that's the video. Matt out, and I'll see you in the next one tomorrow.